Good evening. In a stunning revelation, an internal memorandum from the Trump Organization, never intended for public distribution, has confirmed what financial experts have long suspected. The organization is facing terminal financial collapse. On Monday, February 24, 2026, at around 4:17 p.m. Eastern Standard Time, the interim chief financial officer of the Trump Organization sent a confidential assessment to the executive committee. This document, obtained and verified by the Wall Street Journal through multiple independent sources, represents the first internal acknowledgement that the Trump business empire is no longer a viable going concern. The memorandum lays out, in precise financial terms, a situation insiders have been hesitant to confirm. The organization is experiencing what the CFO calls a terminal liquidity failure, combined with irreversible asset depletion across all major business segments. Simply put, the company cannot meet its obligations, maintain operations, or prevent the liquidation of most of its assets within the next 90 to 120 days. The memorandum includes a detailed liquidity analysis. As of February 23, 2026, available cash and cash equivalents across all Trump Organization entities total approximately $23 million, a sharp decline of $127 million over the past 90 days. The monthly cash outflow, or burn rate, has accelerated to $42 million per month, meaning the organization could run out of cash by mid-April. The CFO warns that any additional legal judgments or accelerated debt payments could raise the burn rate to $60 to $75 million per month, pushing the cash depletion timeline to late March or early April. The memorandum also details asset liquidation, dividing properties into three categories. First, properties under court-appointed receivership, including 40 Wall Street and Trump Tower commercial spaces, previously generated about $47 million in annual net income, now redirected to creditors. Second, properties subject to seizure orders including Mar-a-Lago, Doral Golf Resort, and Trump International Hotel in Washington. Forced sale estimates suggest these properties could fetch only 50 to 60% of their market value, totaling around $340 million under normal conditions. Third, properties still under Trump Organization control but heavily encumbered by debt exceeding market value. The organization's debt obligations total approximately $1.8 billion in secured debt. Monthly payments of principal and interest are around $14 million, but with cash flow severely reduced, the organization is already in technical default on at least 7 major loan agreements. The human impact is significant. The Trump Organization employs roughly 2,400 people. The CFO reports that the February 15th payroll was only partially funded at 60%, and the upcoming February 28th payroll, totaling $8.7 million, is projected to go unfunded. Vendor relationships are also breaking down. Outstanding accounts payable of about $67 million are overdue, and major vendors are either requiring cash on delivery or halting services entirely. Hotels, golf courses, and corporate operations face imminent disruption, accelerating the financial collapse. Licensing revenue, historically one of the organization's least capital-intensive income streams, has effectively ceased. International partners are removing Trump branding, terminating royalty obligations, and the organization is losing roughly $18 million annually. This indicates the Trump name, once an asset, now carries negative value. Legal liabilities are extensive. Corporate-level litigation, environmental concerns, employment disputes, and investor claims could total more than $350 million, separate from Donald Trump's personal legal issues. Tax exposure is particularly severe. The IRS is examining Trump Organization filings from 2018 to 2023. Potential tax deficiencies, penalties, and interest could exceed $200 million, and non-cooperation with the IRS has escalated the process to an adversarial level, increasing the likelihood of additional financial penalties. The CFO reviewed 4 potential options. Voluntary bankruptcy was deemed unworkable due to insufficient cash flow and a damaged brand. Sale of the organization as a whole is unlikely, as no buyer would take on a heavily leveraged, damaged brand. Piecemeal asset sales are impractical due to receivership and debt-encumbered assets. Informal wind-down through creditor negotiation is considered the least bad option, but success depends on creditor cooperation, which is unlikely. The personal financial intertwinement of Donald Trump and the organization complicates any orderly wind-down, making it extraordinarily difficult to execute. Trump Organization properties in Canada, Scotland, Ireland, and other countries face legal and diplomatic complexities. Foreign jurisdictions may resist enforcement actions, potentially delaying liquidation and creating further uncertainty for creditors and employees. The collapse affects joint venture partners, luxury real estate financing, and banks, creating contagion risks across financial markets. The political dimension is also notable. The government must navigate the collapse of a sitting president's business empire without creating the appearance of political interference. This situation highlights the inherent risks of partial divestment. Trump retained financial interests through trust arrangements controlled by his adult children, but the partial separation proved inadequate to prevent financial jeopardy. Future presidents may face stronger pressure to fully divest from business interests before taking office. The Trump Organization, a business empire built over 50 years, is now facing terminal failure, formally acknowledged by its own financial leadership. The internal memorandum represents a turning point. The organization cannot meet obligations, cannot maintain operations, and cannot prevent systematic asset liquidation. The jeopardy is active, immediate, and irreversible. The coming weeks will determine how creditors are paid, which assets are liquidated, and the allocation of losses. The end of the Trump business empire will reshape American business, legal, and political landscapes for decades to come. This is your channel name, bringing you the latest updates on this historic financial development.